Hello? Okay, can you guys hear me? If you guys, okay, now I think you guys should be able to hear me. If you guys can hear me and see me clearly, do me a favor and drop one in the chat for me if you guys can hear me and see me. I had some technical difficulties getting on here right now, but we should be good. We should be good. So, if you guys can hear me and see me, a 1 in the chat will do great. I think that makes it worse. Okay. Cool. Yeah, Abraham, yes, it is as of right now, bro. So we're doing it on YouTube, just to get momentum going for the time being, you know, get more viewers, reach more people, for lack of better words, and eventually, whenever we start having, you know, more consistently, you know, 20, 30, 40 viewers at a time, then we'll start doing the private live streams on Zoom again. A big reason why I didn't like doing them too much on Zoom is because what ended up happening is a lot of them wouldn't record when I thought they would be recording, or my memory would always run out on Zoom. Even though I pay for it, you know, I would still run out of memory, and what would happen is the calls wouldn't be recorded, and I like having them recorded, you know, for you guys to watch them later. But when I do it on YouTube, they automatically get sent to my YouTube archive. So that's why I'm doing it on here, to get more traction, for 1, and for 2, to reach more people, and for 3, that way they're always recorded without me making a mistake. To answer your question, so as of right now, yes, this is the only place for the live streams. So with that, if you guys are able to, you know, if you're in the Discord, or if you guys are on social media, whatever, right? It's not showing me the number of viewers, but when I last saw it, it said 4. So that way we can get that to a higher number. If you guys can, you know, please go in the Discord. If you're in the Discord, and say, hey guys, get on the call. You're wasting your time if you're not on the call, right? Say something like that. And if you are just a viewer, new viewer, then just sit here and learn. And if you are an old viewer that has already been, you know, watching us, then, you know, do me a favor, take a pic on your phone, post me on Instagram, and tell people to plug into this call or next week's call, right? Social media goes a very long way, you know, in today's day and age when it comes to marketing, and I could always use the help to impact and educate more people abroad, across the world, right, and across the country. So with that being said, it's very much appreciated, but it's not necessary. So to get into tonight's call, what we're going to be doing, same thing as always, we're doing 2 live streams this week, tonight and on Thursday, because last week I had a bunch of hiccups and I wasn't able to do Thursday night's call. So we're going to be going over what happened last week, and we're also going to be going over what we can expect to maybe happen this week, and what happened today, and maybe see if we have a trading opportunity, and if we do, then we will go ahead and capitalize on that and make sure that we enter. So as always, make sure that you guys are taking notes on things that you are not familiar with already, or to write down any questions or comments or concerns that you might have throughout this call. That way I can, since there's not that many viewers, we can take advantage of that and make this a little bit more private with each other. You know what I mean? In the sense where, if you do have a question or something outstanding in your mind, you know, and you take the time to write it in the chat, then I will for sure be able to answer that, right? When there's more people on and more people are commenting, I might not always have the time to respond, but, you know, since it's a small little group, ask your questions, ask me if you want me to look at a pair or look at a certain trade setup that you took or whatever XYZ, and I'll make sure I take the time to respond and answer your question particularly. So take advantage of that. And then, as always, the only dumb question is the question that you don't ask, right? So with that, guys, we're going to go ahead and get into it. As always, my name is Gianni Oliva. Ollie Cashflow is what I like to go by, or Ollie. And I am the mentor of this group, right? And I'm the founder of this company. So that means it's my job to teach you guys how to trade correctly, in my opinion of what correct is, and to make sure that you guys are making the correct decisions on the charts and off the charts, right? Because we all know that trading is more mental than it is physical. And if you have a bad mindset, you have a bad mentality, you have a bad spirit, you have a bad physical life, everything, that's going to carry on to the charts, and you're going to make some bad decisions, which are going to make you lose money. And when you lose money, no matter what people say, it makes you feel even worse about yourself, right? You lose $100, $200, it's not a lot of money. But when you're a beginner and you blow $200 by trading stupid, it makes you feel pretty bad. And a lot of times it makes people quit trading when the whole thing isn't that you needed to quit trading, it's that we needed to quit some bad habits, right? So what we're going to cover on tonight's call, again, is what happened the previous week since we all last spoke with each other, and as well what we can expect to happen this week moving forward. And throughout that, we're going to be dropping, just little pieces of advice that you guys should follow throughout your trading career, right? And if you don't have to, you don't gotta listen to me, but I would like to consider that I've found success, for lack of better words, when it comes to trading, and I think I'm fairly educated on what do's and don'ts are when it comes to the trading world, right? So would I consider myself somebody worth listening to? I'd say yes. You know what I mean? That's just my personal opinion, but we'll see what you guys think about that, right? And if you guys do think that I gave you guys some value tonight, and that you were able to learn some stuff and take away something of knowledge from tonight's call, again, do me a favor, just shout me out, right? Shout me out. Go on Google, leave us a positive review, all that good stuff, and it goes a long way. And we'll be back here next week. So let's go back to where we spoke last time. Let's put this back there. So last time we spoke was on Thursday night. So let's put it to Friday. Put it right there. Now we're going to do this, and we're going to make this bigger, and we're going to go right here. All right. So this is where we were on Friday. We're going to scoot this over because this trade wasn't active yet whenever that was there. So basically what we had ended up saying was, or I guess I'll put it back there. Last Thursday, we were analyzing this pair. We were analyzing EU, and we noticed that, so pre-context, right? Pre-context. The market, for one, has been very choppy and volatile since the election happened, and also since after the election, all of the new regulatory policies that have been getting put into place from the new president, right? From Trump. So whenever Trump says something, controversial, for lack of better words, it moves the market in a way more significant way than I thought it originally would, right? So the main thing that has been of conversation for these past couple weeks has been the tariffs that Trump has been talking about with Mexico, with Canada, and with China. And I'm pretty sure those are the main three. I don't think there's other ones, but I'm not aware fully. But so we knew that there was a lot of volatility that was happening because of the tariffs, right? So if we go back to beginning of March, end of February, we were at a very high point on this currency pair, Euro USD, right? The dollar was losing a lot of its strength that it had built up when Trump won the elections, right? Whenever Trump won, the dollar gained a massive amount of, influx, I guess, for lack of better words. And the pair Euro USD went to a very, very low bottom that it hadn't been trading at for a long time, right? If we look back, let's just go look. Better to show you than to tell you, right? This is still February. I guess we can consider, or we'll just go the daily. Right, so if we start looking around when the election time happened, right, that's right here. Right, all this is elections and Trump winning the elections and so on and so forth. So the market tanked a lot, right? Because the value of the dollar gained exponentially. For one, because interest rates stopped getting cut. For two, because people had more faith in the economy. However you want to look at that perspective, right? We're not here to talk about the politics of it. We're here to talk about the economical side of it, right? So economically, people were, expecting and hearing better news for the dollar. So people put more money into the dollar, right? And something that we want, I think I talked about this last week, is how there is a nice double bottom pattern on the daily time frame as well, which we are currently seeing get fulfilled beautifully, and we'll come back to this double bottom. So you hear me mentioning the double bottom now, remember that, and we'll talk about that again later tonight. But we're not going to talk about that right now. So going back to smaller time frames, the context of what I was saying is that the market had dropped off significantly whenever Trump started his presidency again, right? And whenever he started announcing tariffs and announcing all of that stuff, that caused a lot more volatility to happen on this currency pair specifically, right? Main thing being that the dollar gained a lot of strength for the time being because, in my opinion, I'm pretty sure this is how it all works, because of the fact that people were scared of all of this stuff that he was saying. What happens when there's fear in the market, right? When there's fear in the market, people sell stuff, right? People sold their stocks, people sold their crypto, right? For those of you guys that have stocks and crypto investments, right, you all have noticed that your assets are down significantly compared to where they were 2 months ago, 3 months ago, right? It's not because the market is doing bad, but it's because there's fear in the market, right? Trillions of dollars have been wiped out of the stock market in the past 2 months alone, right? Bitcoin went from like 120. Right now, Bitcoin this morning was like at 81,000 or something. So it's down, to over 25% pretty much, which is a significant amount compared to where we were at, right? But it's not, again, because the economy is necessarily doing bad. It's because there's fear, right? What is the fear going on? Fear is still over, the Ukraine war, and then Trump talking to Zelensky and all that stuff that happened in the White House the other day. That has a lot to do with moving the market as well. But when there's fear, again, people sell their stocks, people sell their property, people sell their crypto, people sell their assets known as risk, right? Because whenever there's uncertainty going on in the market, people would prefer to have cash, right? People would prefer to, have their dollars in their pocket stuffed under their mattress for you guys to understand that. And when that happens, when there's an influx of people selling their assets, that means that there's an influx of people buying dollars, for lack of better words. That's what you're kind of doing when you're making a transaction. When you're selling a stock, what are you doing with the stock? You're exchanging it for dollars, meaning you're buying dollars, right? So when you're buying dollars at a massive amount, trillions of dollars, what does that mean what's gonna happen with the value of the dollar? What do you think is gonna happen, right? If a bunch of people are buying the dollar, what's gonna happen to it? The value of the dollar is going to increase, right? And if the value of the dollar increases, what does that mean is going to happen with a currency pair like Euro USD, for example? That is going to go down, right? So whenever Trump first started talking about tariffs and all this and that, we were trading very well and we were moving very high, right? We were breaking above a zone that we hadn't been at in a very long time. As soon as he announces the tariffs again, what happens? Or for the first time, right? This is when there is the first mention of the tariffs, right? And then the market closed. Okay, let's zoom in a little bit. Right? So this is when tariffs were first being discussed here. Okay? And then what ended up happening is the market closed, right? And then as soon as the market reopened, okay, let's say the low is right here, there was an 80 pip gap of price that happened as soon as the market opened because of the tariff announcement originally. Okay, not that anything happened, they didn't actually instill the tariffs yet, but just to talk about it. Okay, and now this entire time frame after this has been the market rebuilding its strength again, right? Rebuilding its strength again after the announcement of the tariffs, right? The reason why it rebuilt itself was because, right, the tariffs didn't actually happen, right? They were all still in negotiation. Everything was still being discussed, right? He put like another 30 days on it, I'm pretty sure is the number, for Canada and for Mexico. And then Mexico and their president had a good conversation with Trump, or they had a press meeting or something like that. And their meetings went good. Same thing with Canada in this amount of time, right? In this time frame, okay? But now if we go in more recently, right? More recently to where we were trading at before, right? We were trading, so this was Thursday of last week, right? And if you guys notice, right, how much, again, the market was down, right? So, again, this is all because of political uncertainties and, everything else of that nature. But taking technical analysis into consideration, so everything we just mentioned was the boring stuff that no one likes to talk about, which is fundamental data, right? Fundamental analysis, okay? But now if we look at raw price action and raw technical analysis, right, we noticed a few things already. Main thing being is that we were trading at a very low whole number zone, right? If we look at this white line, that whole number zone is 1.4 thousand, 1.04 thousand, right? That is a very strong psychological zone and a very strong whole number zone, right? How do we know that? Well, we can just go look in the past, right? We can see here, very strong support. Here, it was a very strong resistance or supply zone, whatever you want to call it, right? Resistance there, right? Support here, another support level there. And that's all you kind of really need, right? That's all you really need. We don't got to make it more complicated than that. If we want to look way back here, we can say there, again, technically a zone, right? But it's not necessary, right? But we'll still consider it a zone that needs to be respected. And that's why we have this yellow box right here, because it's a zone that is potentially going to get a reaction, right? And since it is a demand zone, or, I mean, I said supply early, but since it's a demand zone or a support zone, right, or an, you know, a liquidity zone, whatever you want to call it, we can expect a bullish reaction to happen off of this, meaning that the market probably is going to go up, right? So what we had said we were going to wait for was for the price to break above this yellow box, right? And we didn't really want to retest necessarily. What we had said on Thursday was that we just wanted to see a strong break, right? We just wanted to see a strong break above that level. And if we saw a strong break above that level, that we could consider getting in for buys, right? So what ended up happening is the market closed on Friday, right? But over that weekend, right? So this would have been the entry right there. And that is the entry that we called out in the Discord group. But point being is, this is what I wanted to get into, right? So we talked about we already talked about getting how to prevent getting wicked out last week. So if you want to, you know, see preventative measures on how not to get stopped out whenever there's a wick like that, go watch last week's live stream, and then we talked about that for like 30 minutes, right? So I'm not going to discuss it too much tonight at all. But we had a very, very, very strong impulsive move, right? And this happened for a few reasons now. Few reasons, okay? One, oops. It was a whole bunch of shit that happened because the market moved, bro. Fucking 400 pips last week. It probably was the biggest move that I had seen ever. You know, not single move, but the most momentum that I've seen in one direction ever, probably since I started trading. It was actually kind of cool seeing it because it happened so fast out of nowhere, right? But it was a catalyst of a bunch of different things that caused the market to move the way that it did, because it moved 400 or 500 pips before we started having before we started having any sort of bearish pullback, right? And the reason why the stuff that I'm about to show you happened is for a few reasons, right? For one, there was a lot of negative trade data that came out, right? Where it was measuring inflation, measuring job data. So job data was kind of slow. There wasn't a lot of job growth that happened for January. And there were a lot of layoffs that happened in January, right? There was a lot of people that filed for unemployment, and that drives uncertainty in the market, right? Add that in along with everything that happened in the White House with the Ukraine president speaking to Trump, that causes a little bit more fear, even though, again, it causes stability for the dollar typically, not always though, right? Because in the case that we just spoke about, what happened, at the beginning of the month was a good thing for the dollar. The dollar gained a lot of strength, right? Because people were selling their stocks, people were selling their crypto, and they were putting money in the dollar, right? Remember, we mentioned that, okay? And now a similar thing happened here, but an extra step was added. Okay, and for those of you guys that pay attention to political stuff, right, you got to think about how this works, because there's no way to really tell, right, when it's going to happen. But what happened is people even sold more of their stocks, sold more of their crypto, right? But instead of leaving it in dollars, right, and this is on a macro level, we're not talking about you and me, we're talking about banks, institutions, hedge funds, liquidity providers, banks, billionaires, trillionaires, not no trillionaires yet that we know of, right? But families and billionaires and all that stuff. But point being, what I'm saying is they sell they sell their risk, they take it into dollars, and what they do is they take the dollars now and they swap it. What do they swap it for? They swap it for something known as a safe haven asset. Okay, right? Safe haven currencies. I talk about this a lot in the Forex course that we have, right? So safe haven currencies, you have yen, you have Swiss franc, and I wouldn't consider euro. People debate about that. I wouldn't consider the euro a safe haven currency, or GBP. They're not considered safe haven currencies because they move just as much as the dollar does. But the franc and the yen, right? We'll go pull up those pairs in a minute if we want to, right? But yen and franc are safe haven currencies, right? So people sell their stocks, people sell their risk, and what happens is, as soon as they get it, boom, they swap it. They do Forex in the real world, right? Not digitally like we do. They do real Forex, and then at that point, they have another currency that's worth more, has less risk, because their presidents aren't doing anything crazy. Their governments aren't going through any political tension. Their country isn't going through any sort of war, right? Switzerland is like the safest place in the fucking world, pretty much. People don't talk about it. But if I was to move anywhere, I'd probably move to Switzerland, right? Because yes, they have high taxes and all this and that, but they're safe, and their money is worth a lot of money, right? Their money is worth more than dollar is, right? You get less US dollar than you do for francs, right? So, or no, not necessarily. Yeah. What is the exchange rate right now? Yeah, $1 US only gets you 87 cents in Switzerland, right? So the franc is worth a lot of money, okay, in comparison to the dollar, right? Because again, it's safer, right? So, and then the yen, the reason why the yen is worth so much, even though it's on a negative scale with the dollar, like 1 yen is like 100 USD. I'm sorry. Like $1 is like 100 yen or something like that. So even though the exchange rate still isn't good, the interest rate that the Japanese banks pay is extremely high. It's like 8 or 10% or something like that. What does the US bank? What do US banks give you right now? Here's a great question to ask yourself, guys, that are new students, old students, or future students. If you're watching this, right? How much? What is your bank account giving you for interest right now? It's very low, right? It's very, very low. It's less than half a fucking percent is what you get, right? Unless you have a high yield savings account, which you're gonna get lucky, 3 to 5%. I have not to talk numbers, but I have a high yield investment account with Merrill Lynch, and I think right now we're getting like 8% with it. But you need to have over 6 figures in the savings account itself in order to even qualify for that much interest. I'm pretty sure right now, and it still goes with the prime rate that's talked about, with the Fed and stuff like that. But right now I'm getting, I think it's like 8 or 9% or something like that still. 7 to 9%. I haven't checked it fully, so we'll settle with 8. But you do need to have a significant amount of money. You need over 6 figures to have an account like that. So if you don't have that much money, your bank, you're getting shit. You know what I mean? And then the only way to make any sort of extra money is if you have a bond, right? Which has to do with interest rates, right? So a bond yield, you have bonds. There's another thing, not stocks and bonds. Whatever. I have it in the course, so I forgot what it was, but I'm having a brain fart. But there's bonds, and then notes or something like that. Something, but it's basically like you're storing your cash away, right? And you're gonna get interest on the bond, right? But bonds are down right now as well because of all this going on, right? So when the dollar loses value because of fear, or when there's fear, I don't even know how I went on this giant rant about, okay, well, yeah. But because Japan, right? Because Japan and Switzerland have high interest rates, right? So the way it is let's say you're a millionaire, let's say you're a billionaire, right? You're a billionaire tycoon, right? And you liquidate $50 million, $100 million worth of stock that you built up over the past couple years, right? When interest rates were high and everything, right? So what you do is you sell this $100 million worth of stock, right? And now you have $100 million in cash, right? But if you're not really too sure about, the future and the well-being of the country because, you think a war might happen, or you think we're going to keep giving money to other people, or, whatever it is, right? And you're not too sure about the value of the dollar, realistically, let's be real, guys. The value of the dollar does not matter to us, right? We're fucking broke compared to these people that it actually matters to, okay? You know, your $50 is not getting affected by the economy, okay, or by the value of the dollar, right? When you go buy eggs, yes, right, you're seeing the very, 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 very end of inflation and the end result of interest rates, right? But the people that it really affects and the people that are watching that, again, are the people that are doing $100 million deals, right, or transactions, right? Because if you liquidate 100 mil, right, and the fucking value of the dollar drops, you know, 2%, 2% of 100 million is what? You know, 2 million. You just lost $2 million. You know, that's, even though if you're making even though you made 98 million, it's still a lot to say, damn, bro, I just lost 2 million, right? And then after fees, after taxes, after everything else, they don't want to do that, right? So what's the smartest thing that they can possibly do without putting it into another stock or another crypto or another investment property that could lose value? What's the smartest thing to do? You swap it for another currency that's worth more, right? That's what Forex is on a macro level, right? It's people exchanging currencies for each other to protect their money, right? And potentially, so, okay, think about this, too. This is a really good thing to remember when you're looking at it, and we'll get back into the chart in a second, okay? Forex, at a macro level, is a form of preservation rather than a form of growth for macro investors, okay? It is a way for people to protect and hedge their money against inflation, against devaluation, against, you know, turmoil in the market, whatever. And if they're lucky, they'll pick something good enough to where they'll be able to make money at the same time still. So the goal with Forex on a macro level, not day trading Forex, but people that are actually doing Forex, right? It is to preserve the money they're making, right? And potentially still make money because of that country's interest rates, okay? So that's where other countries' interest rates are very important, right? We're not going to really talk too much about the European Central Bank and all that because, you know, it's kind of not really necessary right now. Basically, though, what we're about to get into and show you the charts, the euro, even though it's not a safe haven currency, it looked safer than the dollar, right? Because what happened is, the biggest, and I don't think he did anything with Mexico or with Canada, but with China. I think China got like a 30% tariff, right? And if you guys don't know what tariffs are, I might make a video about that. I need to start making better content, dude. That's something that is a personal goal of mine, is to button down on content creation. Because you guys deserve it. You know, I always say I'm going to do it, and I never fucking do it. Because that's something that I struggle with. You know what I mean? You know, as the mentor, I got to be real with you guys. I got to be honest with you guys. I struggle when it comes to creating. I love teaching, right? I love teaching. I love talking about this stuff. I love having the one-on-one conversations with students. But I suck. I'm good at it. But I hate recording content, man. I hate recording and clipping and editing. But because I hate it, that's what I need to do the most. Because I know it's what's going to make me grow the most, right? So when you do the thing you hate doing the most, that's when you'll make the most money, right? So I know when I start doing it, my business will grow, and I'll start, you know, doing all that. Yeah, no, the whole course got upgraded. That's what I'm saying. The whole course I upgraded a lot. But I struggle with this too, you know, because I can't post those videos on YouTube. I could, you know what I mean? And I think about that a lot, but that's something for, you know, a deep thought day one day. I don't know why the camera keeps doing that. It keeps autofocusing. But yeah, to get back to the conversation, though, yeah, so the reason why the dollar lost a lot of value, because let's just show you guys now. So this trade ended up winning, right? It's basically, so if you go watch Thursday night's analysis and you look at the trade setup that we called out on Thursday night, we didn't take the trade anywhere here because the setup wasn't there yet. But when we got the break, right, we almost got stopped out. I'm not going to lie to you. We almost got stopped out there. But we got the break. Technically, we got the retest. And then the real better entry would have been if we waited for that bullish engulfing candle right here. And we could have entered on the break a structure right there. And we would have had no drawdown. But that's not what happened. You know, we entered in whenever we broke above the zone again. So we entered in there. Almost got stopped out. But we didn't. We almost did, though. And then take profit got hit, smashed. That was a big trade. It was a 68. It was a 70 pip trade. But, and then the breakdown, I sent that again on Thursday last week, so you guys can go look at that. But to move into this current week, right? There we go. So look how far the market moved. All right, so let's go measure this now. So let's go measure the peak, and we'll go to where we're currently at. So this is where we're currently at, trading at right now. So this is where we just were last week, okay? So I want you, for the people that are actually still watching this, okay? This is a massive move, okay? This is a massive, massive, massive fucking move, okay? Excuse my language, sorry. But let's measure it, okay? So we measure from the bottom of this swing low. $530 pips, okay? 530 pips in a matter of one business week. One, or not even business week, just 1 week. It says 6.5 days, 7 days, right? Or let's go to the actual peak. Yeah, peak's right there. 7 days. In 7 days, the market traveled 526 pips, right? And that's not absurd for the market to trade 500 pips in the week, but 500 pips like this, you know, up and down, up, you know, bullish, bearish movement, not just straight, you know, that was a huge move, right? And we could have held that original trade and we would have made a lot of money, but, you know, coulda, woulda, shoulda, right? But we basically erased, if we go to a higher time frame, if we hide the drawings now, right? So now we'll go back to this in a second. So what took us we'll say here. We'll count here. So over 100 days, okay, 100 days worth of trading. So 3 months, over 3 months worth of trading, all right, was wiped out literally in 1 week. So all of this movement, right, as you can see, this is a high time frame right now. We're on an 8-hour time frame. Nothing but blue candles right here, okay? And now if you remember what I mentioned to you guys at the beginning of this call, right, that we had a double bottom on this lower time frame, right? We had it here, right? I know I have a lot of stuff there now, but, you know, just bear with me. We had the double bottom. There was the neckline, right? Literally double bottom, broke it, and skyrocketed and completely fulfilled the double bottom, okay? So when we started noticing this move, what caused the move? It was everything I had already just mentioned to you guys. It was the tariffs. It was the news about job data, about interest rates. It was about everything going on in the White House. All those things accumulated, the tariffs, and that caused the price to go the way that it went. I never expected that it would happen that fast, though, that the dollar would lose that much value that fast. But that was a lot. You know, that's a lot. You know, so what's going to happen this week, it's very hard to tell, right? Because there's a lot of fear in the market, right? But we caught this really good setup, too. I want to show you guys this real quick. And then we'll get into present time. Right, but I woke up and I was like, damn, dude, I missed this entire trade. Where are we at? Yeah, this was a beautiful setup. So I woke up. This all happened very fast, guys. It happened very fast. I went to sleep. I didn't trade on Tuesday, right? So we went to sleep after this trade hit. And then I didn't trade the market this day. And I come back and I check. And we've moved already. How many pips is this right here? Already 250 pips. And I'm like, oh, you know, what's going on? You know, so then we look at it. And the market was right around here at this time. Where was it? Because I woke up early. I woke up in between London and New York. So let's say I was right here, more or less. But I just saw the raw momentum. You know, I saw the raw momentum. We were smashing through levels. And there just seemed like there was a lot of bullish momentum. So literally, I was half asleep still. I was half asleep. And all I did, we just drew a nice, because we had a very strong bullish fib. Very easy to tell. I put an order in for this trade. As soon as we entered the gold zone area, right? Because gold zone is anywhere considered here, right? Anywhere right there. I had an order set. And I'm telling you guys, it was on the fucking pip, dude. It was on the pip. And I even sent this out in the Discord. I said I sent it out really late, though. I sent it out late, and I said, sorry, guys, I sent this trade out super late, but I still wanted to send it out to just show how accurate that was. That was, you know, this was probably one of the best trades that I ever had in my career, you know, because of how just accurate it was. I've had a lot of zero drawdown trades, but, and granted, it's nothing special. All we did was ride momentum. We just rode trend. But it was still pretty cool to see it, you know, that it moved that fast, because this trade, yeah, we got 120 pips on this trade because we just left the target. I just left the target open because I was sleeping. You know what I mean? So I entered the trade, said to take profit at the highest take profit that we could, and then when did it hit? Afternoon time. So when we woke up for New York is when I sent that out. So I sent it out like around here, you know. But at that point, it was still way too late for me to send it. We were already 50 pips in profit. But that was a really cool trade, though. You know, that was cool. And then after that, we still kept going higher. Almost to fulfill the full fib up here, right? Almost there. You threw, how much is it? You threw a standard line. I put on a 0.8, bro, 0.8. So I made a little over 1,000, it was like 1,001, like 100, something like that. And that wasn't my biggest trade. I made more, but using a low lot size and using, not over risking, that was definitely one of the top trades that I ever had in my career, pretty much, you know, because it was really, you know, I've never held a trade that long, 100 pips, with that high of a lot size. So it was cool, you know, because I made over $1,000 on a single trade before, but I was trading more aggressive. We were doing like $30, $40 a pip. And we only got, though, you know, 30, 40 pips, something like that, you know. But we still made a lot of money, though, off of that. But on my regulated account, that was one of my bigger trades, for sure. And right now, this is where we're trading at. Let's see. Let me just close this, actually. And we'll go to where we're currently at. Nice. I'm on time still. Only 8:45. Now the last 15 minutes, we'll talk about what we can expect to happen this upcoming week, right? So in the Discord, we sent this out this morning where yeah, I literally said this, and this is what I'm going to say right now is, again, that I said that I'm not seeing an entry worth taking because of where we're currently trading at. We're trading at a middle of a whole number zone, 8,500, and we're currently still experiencing equal highs. Right? You can see an equal high right here, equal high right here, equal high right here, meaning that there's a high chance that either one, bullish momentum has kind of tapped out and we're not able to break through that 8,500 or through that 9,000 level, or it's technically the 750 level, but we're not able to break through the middle of that level strong, right? And we're setting up for a bearish move down, or two, this is a what would you call it? Would this be a bull trap or a bear trap? I think it'd be called a bear trap, where they're letting price consolidate at this level for so long to make people think that it's a resistance level. You know what I'm saying? It's that a resistance level is there, but what's actually happening is liquidity is getting built up. Everyone is starting to sell, right? A lot of people are starting to sell right now because they think of what I just told you, that, you know, that it's a triple top. It's a you know, it's a triple top, you know, it's a fucking resistance, you know, supply level, whatever. And as soon as enough people are in that market, in that trade, then the price could break up again to the upside, right? That's what my little bit of a fear was. So I said I'm still waiting to see if we have sell confirmations, which we kind of don't still. We could have sold still this morning because I sent that out right around here. If we drop to a smaller time frame, 5 minute, for example, right? I sent that trade out around here, 8:30-ish. So let's say, for example, I sent the trade, because I could have analyzed it like this on a 5 minute time frame. Let's put it back to 8:30. Put 8:45. Okay, let's say this is what the market looked like. Okay. Maybe we could have oops, gone like So this is me doing it off the dome with you guys right here, right now. Okay, we could have gone like this, drew a fib here, said that we're still kind of partially retesting the 78 zone. That's right around here. We could have said that, right? We could have said, okay, guys, we have a small little tiny little baby support level right here, right? And then once we break, and I could, I mean, it would have been a good trade still. It would have been a good trade, right? But I didn't do it. I'm just saying what I could have done. But I don't like analyzing the 5-minute time frame for this just because it's a little tricky. Because I'm still like a scalper kind of intraday. But this still would have been a good setup if we measured that support level and we said, okay, guys, once we break that support level, we can either enter on the break or wait for the retest, and we're going to target this previous low right here. Okay, so we could do that, and let's say that we put our entry right there. Stop loss, realistically, if you wanted to be safe, you would put it above here. That's a lot, though. That's a 17 pip stop loss. And then your take profit would ideally need to be a 3-to-1, right? So if we're going to target down here, we would lower the stop and make it a 3-to-1 risk to reward. So 3-to-1 is a 10 pip stop loss. And we could, so that would be the full analysis right there. Now let's see if there's anything else we could have done. That's not a good sign. This is kind of useless. We have a strong high on the 5-minute. That would have been a good sign for us. And then the trade would be activated. Yeah, so honestly, I probably would have closed around there, realistically. So we would have been able to get some pips. But you see how choppy that is, though? I don't really like trades that are that volatile. You know, because we would have been in it for this amount of time, and we still weren't able to get 30 pips out of it. You know, granted, yes, you're in profit, but then going from, you know, 20 pips in profit back to your break-even amount, back down to 15 pips, back up to break-even, then we're back down to 25 pips, then we're back up to 15 pips. I think that's stressful. You know, that's stressful personally. Realistically, if I entered this trade, I probably would have closed right here. You know, I probably would have closed right there at 10 pips, 10, 15 pips, taken that and ran with it. That probably would have been the easiest thing to do. But let's see. Yeah, and then you're back up to your entry again. You know? No, thank you. So we could have entered the trade there. But let's say you want to hold it to your take profit. Like, let's say you're a set and forget kind of trader. If you're a set and forget trader, you would have entered here, made all this money, and now you're in fucking drawdown. You know what I mean? So that's not good. So that's why I didn't want to call out that entry earlier, because I didn't have confidence in the surety of the setup. And as of right now, where the market currently is, to be real with you guys, I'd be lying if I told you I knew where it was going. I'd 100% be lying. Why? Because the same thing I said this morning is the same case, right? We're in the middle of the 8,500 zone, right? So if we go back and we look, right, this white line is the 8,500 zone, right? So we have been consolidating. Let's get rid of the candles. Let's look at a line, right? We've been consolidating. Sounds kind of funny. Consolidating, right? But, all right. Oops. Again, consolidating at this level now since the market closed last week. You know, yes, again, I have trading opportunities in between that, but realistically, in that scenario, I wouldn't have even looked at the 5-minute. I would have tried to trade the 1-minute and aim for like 10 to 12 pips again. You know what I mean? Hyper scalp at that point. Really scalp on a small time frame, but I would not be analyzing for a 30 to 40 pip trade in this current market condition. Why? Because there's just uncertainty. You know what I mean? I don't know what's happening politically. There's probably going to be a lot of news releases this week as well. On top of that, right, just raw technical analysis, right, here, we have a high, we have a low. I wouldn't consider that the low. We have a high, we have a low. We have a lower high, we have a lower low. We have a lower high, we have a lower low, right? Now we have an equal previous high, right? Still followed by, now is this considered a higher low? You know what I mean? I wouldn't really consider, I don't know. I think that this still looks, I don't know actually. Kind of looks a little bullish if you want to say like a little bit of a flag pattern there. But these are all fucking fake outs or something. You know what? Like I said, the bear trap. I would say a bear trap scenario is more likely right now, where there is a lot of sell orders going on, and it's kind of a setup, for lack of better words, to have all those people hit their stop loss, and then we continue higher, right? That's kind of what I legitimately want to see happen, not for any particular reason. It's just kind of what I see, right? Because the lows look kind of hey, shout out to Eden, bro. Everyone say what's up to Eden. Eden's an old friend of mine, one of my oldest friends that I have actually. First time he's on here, I'm pretty sure. First time, man. So congrats. Welcome to the chat, bro. Welcome to the chat. Right now we're going over what we expect the market to do this upcoming week, based off of all the political tension that's been going on. So you're kind of tuning in at the end a little bit. I'm not gonna lie to you, but we'll still make it as easy as we can, right? So to continue where we just were, guys. So we have I'm still personally wanting to see the market go up because I still think there is uncertainty in the market right now, and just the way that the chart's looking at this current moment, if we were to ignore this part right here where we were having the lower highs and the lower lows, and we want to look at this part particularly right here, right? If we're going to look at this, we could consider that a break of structure right there. We could consider that a break of structure, and this could be considered a new impulsive move, right? And if we were to do that, that would mean that we would draw a bullish fib, right? We would draw a bullish fib right here. So if we were to draw a bullish fib like this actually looks pretty sexy. I can't lie to you. Look exactly where the market had a nice little U-turn right here, right? We did have, yes, a lower low, lower high, lower low, lower high, but that could be just to fulfill the fib sequence, right? So now the way that the fib works, and again, we're on the hour time frame right now, right? We don't usually look at the hour, but we're doing that right now because it's Monday, right? We usually do these calls on Thursday, right? But we're doing it today to give you guys a forward for what's happening this week. And then on Thursday, we're going to come back on here and we'll see if we were right or wrong, right? So the way that the fib should play out, if this fib is going to hold true, is that we have the low point, we have the high, we're in the middle of the gold zone where we had a reaction, and now I'm late to this trade, so let's say we were to enter right here. Let's say we were to enter this right here right now. Tomorrow morning, we'll probably enter it. But let's say we were to enter at current market price. We would target at, this would be take profit 1, take profit 2, take profit 3. And if, let's say, some more stuff happens, let's say there's a wow news report tomorrow morning or whatever, right? We could be lucky and see take profit 4. Is it likely to hit take profit 4? Probably not, because we haven't been that high in, oops, let me move my screen a little bit. We haven't been this high in a very, very long time, literally months, if not years. So we probably won't go that high. But it is likely for us to, and we'll put a stop loss right below the previous low. So we will put our stop loss right. We will put our stop loss right underneath that low, and we'd make this a 4-to-1 safe. I mean, we'd make this a 3-to-1 risk to reward. So a 3-to-1 risk to reward is right around there. How many pips is this for a stop loss? That's still too big for me personally for a stop loss. I would probably put my stop here. And then I would probably target, again, take profit 4 to make this a 3-to-1. I'd probably target right around there, just below it. I think that's a pretty liable trade, to be honest. Right? So now if we drop down to a smaller time frame, let's put the candles back on. Right? I'd say that looks like a decent setup, bro. I can't even lie to you. Yeah, to be real. You know, we have a nice double bottom right there, triple bottom if you want to call it that, right? If we want to go, right, 1, 2, 3, break. You know, I'd call that. I wish I saw this earlier, to be honest. I would have taken this earlier today. But let's just say, we'll leave this chart right here how it is right now. I'll leave it right here, right? Current market price, where I put that, where I said we would get in. What's the entry? The entry that I have here is 1.8455, right? 8455. So hold me to this, right? Let's see where we're at on Thursday, right? Right now the trade is in profit, right? And if we'll just see how the market goes, right? Tomorrow we have news. Trump is trying to force Powell to cut interest rates by crashing asset prices. The Fed didn't do as POTUS wanted. I didn't hear about that, right? I'm telling you guys, when you open up a new window, this stuff gives you some bars sometimes. It gives you some good quality information. Let's go forex.com or Forex Factory. Yeah, I saw Abraham. You said that there's news tomorrow. I'm not sure what news. Oh, President Trump is just going to be speaking. Who knows what the fuck he's going to say. Okay, tomorrow 10 a.m. Jolt's job opening. What is Jolt's about? I forgot what this is about. The forecast was 8, and it was 7.6, so they have it expected to be low. Number of job openings during the reported month, excluding the farming industry. Actual greater than forecast is good, so we're looking for a number higher than that. So let's think about that. So if this is doing data for February, and February NFP was bad. So if there's a high number of unemployment, that probably means that there's probably going to be a high number of job openings, though. This one always confused me. I remember I lost this trade last month. I'm pretty sure when I traded Jolts. Release monthly about 35 days. If release late can impact consumer spending, but consumer spending is low. On my hunch, the reason why I don't want to say that I feel like this is probably going to end up being a bullish news report because of how low they made the expectation. But we can look at that both ways, because like if we look here, this was a low expectation, but it ended up being a lot higher. But then this one was a high expectation, and then it ended up being a lot lower. So I'd say we've been trading in the average for a while. So it's either... I'd say that I have a feeling that the report itself will be bullish, but just for that reason, just because of how close it is to the last one. And then because this is how I would imagine it working, is because it could be on the red fold at 10. We could also do a trailing stop loss. Yeah, I mean, you could do a trailing stop loss if you wanted to, but if the trade's going good, obviously. But what I was trying to say is, I'm imagining the way that this works is, and I had the whole mind map that I made in the course, but it's hard to remember that stuff sometimes. I can't even lie to you. Sometimes I'll rewatch the videos that I made half the time just to remember how it works. It's hard to remember it all. But yeah, so I teach myself. The teacher becomes the student. The student is the teacher. You know what I'm saying? So to answer this, the way that I remember it working, I'm pretty sure, is that since recent unemployment data was high and job creation was low, you would imagine that the job openings would be high, right? You know what I'm saying? I think that's how it makes the most sense, is that, but you can look at it both ways. Because of the fact that unemployment's high, that could mean that no one's hiring, meaning that there's no new job opportunities. Yeah, this is one that always gets me. I'm going to go ahead. I'm going to stick with it, though. I'm going to stick with it. If the forecast was higher, let's say the forecast was like 8.5 million or like 9 million new job openings, I would say it'd probably end up being bearish because it would come in lower. But because they have it so low, I would say it will end up being... Let me look at this again. Let me look at the previous data again. So January was expected to be 7.7, ended up being 8.1. Expected it to be 8.1, and it was 7.6, 7.5, 7.4. Yeah, I'm gonna hold to that. Because like I said, even though there's turmoil in the economy right now, not necessarily there's turmoil in the political side of the economy. There's not necessarily turmoil in the economy itself. Meaning, because from what I've heard, inflation still is pretty good. Inflation is pretty good right now, and when inflation is usually good, that means that job growth and job stability is usually at least remaining at the same area. Again, if the expectation was extremely high, I would be a little bit, negligent to that. But because of the fact that it's low, I don't think that the reality is going to be much lower than 7.6 million new jobs added or new job openings being posted, right? Again, because the economy itself isn't doing that bad. There's just a lot of political fear going on in the economy right now. But the dollar itself is holding pretty good. And to my knowledge, I haven't seen anything that would lead to significant job decreasing. You know what I mean? I could be wrong though, right? Either way, the trade itself that we already have set up is this one right here, right? So if the job openings are good and the dollar gains a little bit of strength, we're already trading a little bit high, right? Maybe we'll come down to here, maybe, right? But since we're calling this one out live, right? Win, lose, or draw, right? We're gonna hold it, right? So we'll see what happens, and we could push up. Or let's say that the news is bad for the dollar, then this trade should be handy dandy. You know what I mean? We probably should go straight take profit 1, maybe retest a bit, take profit 2, and then at that point we can make a decision to exit. But by Thursday, we'll for sure either hit stop loss or we'll hit take profit. So that's the setup. I'm personally expecting the news report to be slightly bearish. Bullish for the dollar. Good for the dollar. And I think that will cause. I think overall though, I think this pair is going to go up. That's what I got going on. I think that we will see a higher price for EU before this week is over. And I think that the main thing we can capitalize on right now are pullbacks on this pair. Whether it's on the 5-minute or smaller time frame, pullbacks on this pair. How we've been in this little slight uptrend. We're gonna keep that going as long as we can. Let's mark the trend as well while we're here. Right, we'll mark trend. That'll be our little bit of our handy dandy support guide. Right, we'll see how long we stay inside of this bullish channel. And hopefully we stay in this channel until Thursday. Right? And if I'm wrong, I'm wrong. You know what I'm saying? And if I'm wrong, we're going to show up here on Thursday night and we're going to break the trade down. Why did we lose it now? Right? Instead of always just talking about the winners. Right? Because we talk about a lot of the winners. Right? Because I win so much. Right? But, we'll break that down and we'll see if we could lose a trade live for once. And we'll break that trade down. And we'll break down the loss as well. Yeah, so win, lose, or draw, right? Win, lose, or draw. I still think that we have more upside potential just based off of this fib structure. I'm mainly riding off the fib. Can't lie to you. Mainly riding off the fib here. Riding off the fib. I think that this is a bear trap, personally speaking. I think if we were going to dump, I think we would have dumped already. That's how I should have summed this all up pretty much. I think we were going to dump off, I think we would have dumped off, before, right? Today's already, it's Monday night. Nothing happened today on Monday. And I expected there to be a lot of movement. Yes, there was movement. Don't get me wrong, right? Like this, But again, I think the move that happened today was setting up this fib. You know what I mean? And we'll see how that goes. That's a high time frame fib as well. We drew the fib on the hour. Right? If we take away all these other little trend lines here, make it clean. Oops. Delete this. Delete that one. Delete this one. Delete that one. Right? And the only reason, again, would this even be the fib? Or would the fib be... That's not right. This is right. There we go. Oh, yeah, okay, because I drew it. Yeah, okay, perfect. Yeah, and the only reason we drew the fib here, again, sum it up very fast for you guys. Swing low, swing high. Why is it a bullish fib instead of a bearish fib? Very easy to answer, okay? If we delete, I'll just redraw it for you guys. I'm going to redraw the fib one more time for you, and then we'll end the call off with that, right? So let's just say we had a naked chart right here, and we're like, damn, man, where should I enter? Where should I enter, right? So, you know, what do we do? What do we do, right? And let's say we're trading right. Let's just say, oh no, I mean, we'll leave it live. We'll leave it live. No reason to say what ifs, right? We'll just say what's happening right now. Okay, exit replay mode. Yes. And you're like, man, okay, what's going on here? How can I analyze this? What do I do? Okay, first thing we're gonna look at, okay, is we're gonna the main thing I like to identify is where's the most recent abnormality, for lack of better words. Where's the thing that looks like the most weird? If we've been in a downtrend all day, what looks the most odd out of this chart, right? In my opinion, I think that looks like this area right here. Why does it look like that area right there? Because there's a lot of blue candles for some reason. There's a lot of buying power. There's a lot of demand going on. There's a lot of bullish momentum in the charts right now, right? When we were just making, again, lower highs and lower lows, right? What happened right here? Something known as 1, an impulsive move, 2, a break of structure. Okay, what's the structure you're talking about, Ollie? What is this structure? Let's just use our mind. Right? Let's just say there's a line right there, right? Why is there a line right there? Because the price reacted off of this line a bunch of times, right? A bunch of times price reacted there, meaning that probably there's an area of interest right there, right? Supply, demand, support, resistance, whatever you want to call it, okay? Right? Area of interest is what we're going to call it for right now, okay? We have an area of interest that got broke through. Not only did it get broken through, but it got broken through with momentum, okay? The momentum was the deciding factor for us to see, okay, well, let's draw a fib here, right? Not only did we break through with momentum, we made a higher high, right? We broke through this previous high and we made a new high. You see how this high is higher than this one right here? That means that it's a bullish move, right? Now, also, this high is also higher than this one, right? Only by a couple pips, right? But it's still considered higher, right? So because of the fact that we had a break of structure, because of the fact that we had an impulsive move to the upside, and because we made a new high, that was lame. I tried to have it ready. Because of those three things, we can draw a bullish fib, right? We can draw a bullish fib. All the conditions have been met for us to have a bullish fib, a new fib being drawn, right? So everything has been met, the conditions have been met, and now we would wait. But then we'd be thinking, damn, it broke through our gold zone. This trade is now invalid, right? The gold zone being this, right? The market went below that gold zone. What is it, you know, so now does this mean we just wasted our time doing this? Not necessarily, right? Because we don't have it on here, but if you guys watch the program, you guys know that there is another little zone in between the 61% and the 100% area, right? That zone, I always forget it because I don't have it on here, but I believe it's 78.6, right? The 78 zone. In that zone, so if this is 61 and this is 100, where would 78 be around? Right? Where, you know what I mean? You're just looking at it, right? That's why I don't have it on here, because I don't like seeing it all the time, right? If we were to do this, okay, where does it look like 78, 75-ish, 78 would be around? It kind of looks like to me it'd be right around here. You know what I mean? 61, 70, maybe 80 right here, 78 maybe being around right here. You know what I'm saying? And now if we do this, we take the 78 zone, and you make another little box right there. Doesn't that look like exactly where the price went before it fucking exploded? You know what I mean? That would give me a good little confirmation that, okay, maybe this fib is valid now. Maybe this fib is actually going to work. So it's worth keeping it. So now that we have that, that's it, right? The fib hit the 78 zone, and we broke through the gold zone again, right? We broke that structure. Some people that trade patterns might even consider this right here a bullish flag. You know, I personally wouldn't, because I think it's a little bit too long, but some people would. Some people would consider that a bullish flag as another bullish confirmation, right? So we just said that we would enter the trade because of this fib. I think we said our price was 8445 or 455. That's where we got in, 455. And again, we're targeting here, and we're going to make the trade a 3-to-1. So we can make the trade 3-to-1, protect our butt. So we have a 16 pip stop loss, 50 pip take profit. And that's the trade setup that we have right now, right? If we want to go look at something extra, right, we could, I wouldn't say that looks good personally. I don't even want to look at anything extra, honestly. I'm tired. So I say that's how the trade looks, guys. We have a nice 3-to-1 risk to reward setup. There's fear, uncertainty, and doubt in the market right now, so I could be wrong. Could be wrong on this trade, but that is for time to tell and for us to find out on Thursday night on the next live stream that we're going to be doing here on YouTube, right? So we're going to end the live stream off with that, guys. I'm pretty sure, you know, I covered everything that I had to cover, you know what I mean? So on Thursday night, we're going to go over this trade update, and hopefully we have, you know, we're moving somewhere differently, and we can maybe call out something else for that night as well. But with that, I'm going to go ahead and end everything off for tonight. I appreciate everybody hopping on here. If you guys learned something, you guys gained some value, do me a favor, just shout me out on social media and, you know, share the content, guys. But with that, I appreciate you all so much for hopping on. And I will see you all at the top because the bottom is way too crowded. God bless. I love you all. And I will see you all on Thursday night at 8 p.m. Peace.